Welcome to Electrified, it's your host, Dylan Loomis. So if Tesla's Q2 wasn't weird enough already, how about this? As far as automotive gross margin, X regulatory credits, when it comes to the estimates before today, Rob around 29, Troy around 31, the Wall Street consensus was 26.2, Tesla's actual 26.2. So call it luck, call it whatever you want, but just confirmation of a very odd quarter. Two quick but very important things to keep in mind before we dive into everything that you need to know after Tesla's Q2 financials. First, Tesla does not have a demand problem. So any analyst talking about demand, worrying about demand, speculating about demand slowing, just immediately write it off. Elon and team reiterated in a stern fashion, Tesla does not have a demand problem and they don't foresee one anytime soon. And two, if you were at all worried about Elon eventually leaving Tesla, those fears have been quelled to some degree. He said that for as long as he can help advance Tesla's mission, he will stay working at the company. So no matter what his title changes to in the future, if it does, he is there for the long haul. And let's do one more. 3, when it comes to digital assets, Bitcoin and Dogecoin, Tesla is barely thinking about this. So all of the time that is spent trying to figure out what Tesla's doing, selling, buying, impairments, all of these different things, I understand it's fun, it's good to understand. However, Tesla is barely thinking about this. So when it comes to digital assets, Tesla is not focused on trying to play the market, really make a bunch of money. Tesla is focused on the core mission, and digital assets are really just an afterthought. That said, I'll tell you what happened anyway. Tesla reiterated its 50% annual growth target for vehicle deliveries this year, and they also confirmed it for a multi-year time horizon. Elon actually said that he thinks Tesla's prices are at embarrassing levels, but remember, they had to do this because of input costs. He is, however, hopeful at some point they can reduce prices a bit. Elon did actually guess on the call that inflation may come down later this year. However, the lithium price has gone up from $11 per kilogram to $80 per kilogram. The point here is that Tesla's higher prices have been somewhat offset with some foreign exchange headwinds. Their cost structure does continue to increase because of inflation, input costs, commodities, and logistics. And given all of these cost structure changes, Tesla is still trying to predict all of this 1 year out as well, since that's basically when Tesla's current prices for current orders will eventually hit the books at delivery. Despite lithium costs going crazy, there are downward trends in other commodities. Elon did, however, plead for more lithium refiners, and there are software margins in that industry. It's a license to print money, and the Tesla team is expecting Q3 input costs to be more manageable and not as inflationary as Q2. During the quarter, Giga Berlin actually achieved positive gross margin, and they pulled this off only producing around 1,000 cars per week at the end of the quarter. This is a great achievement and signals great things for margins going forward from that factory. Elon did say there's potential for a record-breaking second half of 2022, but of course it depends on the supply chain. And Elon said when it comes to future earnings calls, he will be on the call if they have tough situations during the quarter, but if it's all good news, Elon will not be on the call. Tesla Energy actually recorded a record gross profit to the tune of $100 million. Solar deployments were up to 106 megawatts, which was the strongest quarterly result in 4 years. Tesla is still facing import delays, but they're hoping production constraints alleviate in the second half of this year. When it comes to the main bottleneck for battery metals right now, it comes down to refining, not scarcity of materials. Scaling lithium refining is actually very hard to do. Elon guessed that 2/3 of batteries will be LFP or LFP with some manganese. He said there's a ridiculous amount of iron in the world. It's actually the #1 ingredient in the world by mass. The LFP refining process is actually less capital intensive as well, so LFP chemistries are scalable by resources and refining. Elon did say he's seeing a very rapid increase in battery production and supply chain overall, and he said all stationary storage will eventually be LFP, and reiterated if suppliers don't solve problems, Tesla will. This data point was pretty cool. Tesla actually procures 1,600 unique pieces of silicon, which are semiconductors, from 43 different companies. Things are somewhat stabilizing here on the latest generation chips, but there is some tightness in the supply chain with the older chips. As of now, Tesla does not intend to make, aka manufacture, chips themselves. They did, however, just meet with a key chip supplier who is making big investments in critical chips for Tesla vehicles. This is a big deal. Basically, Tesla's suppliers are in some ways turning into partnerships of sorts, making special products for Tesla and going above and beyond to get Tesla supplies. When it comes to chips, Tesla is still pivoting, advancing, adapting, rewriting software to use different chips or to find dual natures for single chips, meaning multiple functionality on one chip, which is actually even better. It's funny, the team said that the shortages in the semiconductor space has actually forced Tesla to be more flexible and to innovate, which has led to them reducing chips in the cars and simplifying the processes. Tesla said that for most of its battery metals, it already has long-term contracts in place. They do have some spot buys here and there, and they are negotiating a few contracts, but overall, most of their supply is secured for the next few years. Tesla's current listed capacity across all factories is now 1.9 million units. Tesla said they're expecting to fill that capacity by the end of this year, and Elon said they could be exiting this year producing around 40,000 vehicles per week. Tesla has already had many 30,000 car weeks, and Elon said the production will look like an S-curve, but they're in the middle part of it right now, and that part is pretty tough to predict. Either way, Elon is confident they will hit 5,000 cars per week at Austin and Berlin by the end of this year or early next. And then next year, 2023, the goal is to produce 10,000 cars per week at each of those factories by the end of the year. Thanks to Tesla's new manufacturing techniques, their robots are down 70% in the body shops of Austin and Berlin when compared to the first iteration of the Model 3 body shop. So yes, less parts, more efficient manufacturing, lower input costs, all of those good things. But it's more than that. Tesla's NVH, or noise, vibration, and harshness, has actually improved with the result of these better manufacturing capabilities like gigacastings and others. The team said Tesla's structural pack in its current form is an A grade when it comes to the overall architecture, but Tesla's first iteration of this structural pack would be sitting at a grade of C. Basically, the point here is they think they can improve it over time to an A grade, but already in its C grade form, it's still beating the legacy or the non-structural pack. Tesla also said the gigacastings are already way better than previous versions, but there are still opportunities to expand the casting into more parts. Listen, one of my biggest takeaways from this call wasn't even anything that they said directly. It was just the tone that they took when the team was talking about all of the innovations and how it views manufacturing. All of the changes from the gigacastings and the 4680s and the structural pack. We all know this, but it was just a strong reminder Tesla is fundamentally changing the way that vehicles are produced. This never-ending process of innovation and simplification and parts removal and increasing safety, lowering costs, all of those things over this decade, it's going to pay off so well for Tesla stockholders. As always, just have to be patient, but really, Tesla is revolutionizing manufacturing. Don't ever forget that. The semiconductor challenges in the supply chain are actually impacting Tesla energy and storage deployments far more than the automotive business. The Cybertruck is still planned for Giga Austin production after the Model Y ramp toward the middle of next year, and Elon specifically said he hopes to be delivering Cybertrucks by the middle of next year. He said it might be Tesla's best product ever. We will race through digital assets. Tesla sold 75% of its Bitcoin during the quarter. The digital assets net line on the balance sheet was down from $1.26 billion in quarter one to $218 million at the end of Q2. Tesla's proceeds from the sale of Bitcoin was $936 million. This was added to its cash balance. Tesla has not sold any Dogecoin. They also said Tesla did have a realized gain on the sale of its Bitcoin. However, this was offset by an impairment charge during the quarter, so it netted out to a $106 million hit to profit and loss, and Tesla sold the Bitcoin due to uncertainty around the Shanghai lockdowns. They just wanted to maximize their cash position. They are open to increasing Bitcoin holdings in the future. When it comes to 4680s, Tesla is looking for total 4680 production to exceed 1,000 cells per week before the end of this year and well before. The output at Cato Road has actually grown by 35% month over month every month since March of this year. Tesla is actually working on 4680 production in Berlin as well. They are facing some new ramp challenges in Texas. They had a cell equipment installed and commissioned here already, and they're targeting to begin production of cells at Giga Austin in quarter 3, and they're hoping that Giga Austin actually exceeds Cato Road's weekly output before the end of this year. Another important reminder when it comes to 4680s, Right now, Tesla is focused on simplicity and scale. They are not trying to find the very best energy density configuration. They're not focused on anything other than simplicity and scale. Over time, they will then add in new bells and whistles and new material breakthroughs, but for now, those are the two main focuses. The team did make a major advancement this past quarter when it comes to the dry electrode process. This is a revolutionary technique. However, this brings many unknowns that are being solved, but it brings a lot of challenges. Tesla did say they're making rapid progress with that, but as mentioned, they're focused on getting the basics right, higher volume, and then they will iterate from there to ultimately increase energy density and reduce the cost of the cell. Elon did say that no battery technology breakthrough is needed to transition the world to sustainable energy. The issue right now is the rate of the current supply chain and how it's moving. It is growing fast, but of course, the faster it grows, the faster we will transition to sustainable energy. Tesla's FSD Beta has now driven over 35 million autonomous miles. This may be more miles than all other autonomous companies combined, according to Elon. Tesla is on track to go to a wide release for all North American customers this year and hopefully to Europe and elsewhere pending the regulatory environment. Tesla is aiming to get to 36 frames per second on all 8 cameras for the autopilot suite, but they're comfortably above 24 frames. Their current software AI group is around 120 people. They do have exciting stuff planned for AI Day, but they did not want to give anything away. Elon reiterated that he thinks Tesla will solve FSD this year. And because of this, he said Tesla is set to increase the price of FSD sometime later this year before it goes to a wide beta. And hey, you guys know I love Rob and Troy. I think they both do great work. However, I was kind of confused why they were expecting the auto gross margin X credits to be around 30 in this quarter, given the Shanghai shutdowns, which would lead to the idle time and the start and stop costs, all of the inflationary pressures and everything going on. It just felt like this number had to be lower. And I don't do estimates, I'm just saying this number didn't surprise me at all. Let's just keep things simple. Tesla's GAAP net income came in up 98% year over year. Don't get lost in the quarter over quarter numbers. This quarter is an anomaly. The good news though, this quarter sets us up for great Q3 numbers because now we're coming from a lower base. But for this quarter, I'm focused on year over year data, and I think you should be too. And let's go up a bit. Operating income up 87.8% year over year. After a crazy quarter two, Tesla's cash and cash equivalents increased 4.7% to $18.3 billion. And lastly, a good quarter for Tesla Solar, as mentioned, the best in the last 4 years. Storage deployments came in lower than expectations, but once again, this was hampered by the semiconductor issues. A quick note on that, Tesla has actually stopped scheduling solar roof installations in most markets in the US. Reportedly, they've shifted their installers to solar panels instead, so maybe this could be a supply issue. This pause, however, only applies to direct install teams. The company Weddell & Sons, who is a third-party installer of Tesla's solar roof, said they are unaffected and they have high levels of demand, and they're increasing their pace of solar roof installations. Also, if Tesla is ramping up its V4 superchargers, most likely at Giga New York, then maybe they are shifting some of the teams there from Tesla Solar Roof to V4 superchargers. Overall, for me, the results were better than I was expecting. I think Tesla handled the challenges Q2 threw its way incredibly well. The team sounded very confident and optimistic about the future, about growth, about exciting new products, and solving all of the problems ahead as we move towards sustainable energy. So on the Tesla front, all is well. Good times ahead. That'll do it for today. Please take a second to like the video if you did. Hope you guys have a wonderful day, and a huge thank you to all of my Patreon supporters.